breaking news. Silver is skyrocketing again. Markets just opened Sunday night, and silver has done something absolutely shocking. We were talking about $72 just hours ago. Now we're staring at $75. Actually, it went even higher than that. $75.51 to be exact, in mere minutes. This isn't just a jump. This is a surge that changes everything. The bottom we predicted? It just held its ground. And now, silver is making its move. But here's what nobody is talking about. What happens when the world wakes up tomorrow morning and sees this? Welcome, my dear friends, to Currency Archive. You know, I always say wisdom comes with age and experience comes with time. If you've been around long enough to see markets rise and fall, to witness the true value of real money, then you're exactly where you need to be. Do me a favor, would you? Just like you'd bookmark an important page in a book you treasure, hit that subscribe button right now. It's just one click, but it keeps you connected to the truth about your wealth. And tell me, friend, where in the world are you watching this from today? Are you watching from the comfort of your home, or perhaps checking in during your evening? Drop your location in the comments. I'd love to know where my wise audience is tuning in from. Now, let's dive into what's really happening with silver. The markets had just opened. It was Sunday night, a time when most people were winding down their weekend, preparing for the week ahead. But for those watching the silver markets, this was no ordinary Sunday. Something extraordinary was unfolding right before their eyes. Silver was skyrocketing. Just a couple of hours earlier, traders and investors were discussing the $72 mark, analyzing it, debating it, wondering if this was where silver would stabilize. But now, the screens were showing $75, and it didn't stop there. Silver had actually climbed even higher, reaching $75.51 in just a matter of minutes. The charts were going wild, each minute bringing new movements, new numbers, new possibilities. For anyone watching the 1-minute chart, it looked like a rocket taking off. Line after line shooting upward with incredible speed. Even on the 30-minute chart, the picture was clear. Silver was making a massive move. This wasn't just a small fluctuation. This was a significant surge happening right as the markets opened on Sunday night. And the big question on everyone's mind was simple. What would happen next? What would Monday bring when the rest of the world woke up and saw what had happened overnight? For many silver watchers, this moment felt different. Just hours ago, there had been talk about $72 being the bottom, the support level where silver would hold its ground. This came after a massive correction that had shaken the markets, a correction that happened when silver shot to all-time highs well above $80. That pullback had been dramatic. It had tested the nerves of many investors. But now, it seemed like the bottom had been found. The price had stabilized at $72. It had held its ground at that crucial support zone. For those unfamiliar with market terminology, support zones are like safety nets, price levels where an asset tries to stay above. Resistance levels, on the other hand, are barriers, price points that an asset tries to break through. Silver had found its support, and now it was pushing upward again. But here's the thing. Nobody could say for certain what would happen next. Anyone who claimed to know exactly where silver was headed, anyone who pretended to have a crystal ball, they were fooling themselves and others. The truth was simple. Silver markets were filled with unknown variables. They were speculative by nature. They were heavily manipulated, and that made predictions extremely difficult, if not impossible. But the facts were undeniable. Silver had jumped up several dollars just as the markets opened. And when Monday morning arrived, when the world woke up and checked their screens, when they saw what had happened overnight, what would they do? The answer seemed obvious to many observers. They would probably pile on. More money would flow into silver, pushing the price even higher. And here's why this mattered so much. Silver was a much, much smaller market compared to gold. In fact, it was estimated to be only about 3% of gold's size. This meant something very important. When money came flowing into silver, the effects were amplified. The price movements were more dramatic, more volatile, more extreme. This is why silver had a reputation for being riskier than gold. It hit higher highs, but it also hit lower lows. Everything was exaggerated. Everything was more intense. And the steroids analogy was fitting, because just like steroids have side effects, silver's volatility came with risks. If gold rose by 5 or 10%, silver might rise by 15% or more. But the opposite was also true. When gold fell, silver fell harder. This double-edged nature made silver both exciting and dangerous. And as Sunday night continued, as the price kept climbing, as it reached $75.21 and kept moving, one thing was becoming increasingly clear. Tomorrow, Monday morning, when fresh money started flowing in from various sources, from gold investors, from cryptocurrency traders, from people sitting on the sidelines, the price could move even faster. The momentum could build. And what was happening right now on Sunday night might just be the beginning. The markets were speaking, silver was moving, and the world was about to wake up to a very different landscape than the one they had left behind on Friday. The question wasn't whether something big was happening. The question was, how big would it get? But there was something darker lurking beneath the surface, something most people didn't talk about or didn't even know existed. The silver market wasn't just volatile by accident. It wasn't just naturally wild and unpredictable. No, there were forces deliberately controlling it, manipulating it, playing with it like puppeteers pulling strings. And the reason was simple. Silver's small market size made it incredibly easy to control. Banks had figured this out long ago, and they had been taking advantage of it for decades. These weren't just rumors or conspiracy theories. This was documented, proven, with people actually going to prison for it. Take JP Morgan, for example, one of the biggest banks in the world, caught red-handed manipulating the silver markets. They weren't just fined, they were hit with a massive $920 million penalty. $920 million. Let that sink in for a moment. And it didn't stop there. 3 of their employees were actually sent to prison, locked away behind bars for their crimes. And what were they doing exactly? It was called spoofing. Here's how it worked. These traders would place massive buy or sell orders on the exchanges, orders that looked completely real to everyone watching. Other traders on the exchange would see all this volume, all these sales, all this activity, and naturally, they would react to it. They would adjust their own strategies based on what they were seeing. They would make decisions. Real decisions with real money, based on information they thought was genuine. But here's the twisted part. Those orders were never meant to go through. The JP Morgan traders would cancel them before they actually executed. They were creating false signals, fake movements, artificial pressure. They were essentially puppeteering other people on the exchange, feeding them false numbers, making them dance to a tune they didn't even know was playing. Those innocent traders had no idea the orders would be canceled. They were making decisions based on lies, on smoke and mirrors, and JP Morgan wasn't alone. Merrill Lynch got caught doing the same thing. A Dutch bank was also implicated in these spoofing schemes. The corruption ran deep, spreading across multiple institutions, multiple countries. But here's what most people didn't understand. Spoofing was just the tip of the iceberg. It was small-scale manipulation compared to what was really happening. The real price corruption, the massive systemic manipulation, that was happening on a much bigger scale. It was happening on the COMEX. For those unfamiliar, COMEX was the major exchange for metals trading. And the manipulation there involved something called paper contracts versus physical silver. Essentially, they were trading pieces of paper that represented silver, but that silver didn't actually exist in the quantities being traded. It was a game of numbers on screens. Disconnected from physical reality, they could flood the market with paper contracts, artificially suppressing the price, keeping it lower than it should naturally be. This has been going on for years, for decades even. And why? Because silver was a threat. Silver was real money, not the paper currency that governments could print endlessly. When people bought silver, they were taking control of their wealth. They were stepping outside the system, outside the control mechanisms, and that made silver dangerous to those in power. The manipulation kept prices lower, kept people less interested, kept the flow of money away from real assets and into paper systems they could control. But despite all this manipulation, despite the spoofing, the false orders, the paper contracts, the price suppression, silver was still moving. Right now, in this very moment, it was climbing back up to $75.21. Even as the markets were being watched, even as the manipulators were probably scrambling, the price was rising. Because at the end of the day, real demand couldn't be suppressed forever. Physical silver had real value, real uses, real scarcity, and no amount of paper games could change that fundamental truth. The manipulation had created decades of artificially low prices, but it had also created something else, an opportunity for those who understood what was really happening, an opportunity for those who could see through the smoke and mirrors. The banks had tried to keep silver down, but they had also inadvertently created the perfect conditions for an eventual explosion. And perhaps, just perhaps, that explosion was beginning right now. Now, here's where things get really interesting. Most people watching silver prices go up and down, they're missing the entire point. They're so focused on the numbers, on the charts, on whether it's $72 or $75 or $80, that they completely forget what silver actually represents. And that's exactly what the system wants. See, there's a fundamental misunderstanding that trips up almost everyone who gets into silver. They think it's about getting rich. They think it's about buying low and selling high, making a quick profit, turning their investment into more dollars. But that's not what silver is about at all. In fact, thinking that way is the fastest route to disappointment, to frustration, to eventually giving up. Silver isn't a get-rich-quick scheme. It never was. and it never will be. Anyone entering the market with that mindset, they're going to get burned. They're going to make emotional decisions, panic during dips, sell at the wrong times. They're going to have unrealistic expectations, hoping for overnight miracles that simply don't happen. But here's the real secret. The secret that changes everything once you truly understand it. Silver doesn't make you rich by turning into more dollars. Silver makes you rich by being real money. Think about it carefully. When someone buys a silver coin for $75, they're not really buying silver. They're trading fake money for real money. They're exchanging worthless paper that's losing value every single day for actual tangible wealth that has held value for thousands of years. So why would anyone want to reverse that process? Why would they want to take their real money, their silver, and trade it back into fake paper dollars? That dollar bill in your pocket, it has lost 98% of its original purchasing power. Soon it will be 99%, then 100%. This isn't speculation. This is historical fact. Every single fiat currency system throughout history has collapsed. Every single one. Not most of them, not some of them, all of them. The Roman denarius, the German paper mark, the Zimbabwean dollar. The list goes on. And anyone who thinks the current system is different, anyone who believes this time it's different, they're setting themselves up for disaster. The US dollar will fail. It's not a matter of if, it's a matter of when. And everything pegged to the dollar, stocks, bonds, retirement accounts, and traditional investments, they're all going down with it. It's like rearranging deck chairs on the Titanic. You can move your money from one stock to another, from one fund to another, but you're still on the same sinking ship. The system is literally designed to fail. That's not an exaggeration or conspiracy theory. It's built into the very structure of fiat currency. When governments can print unlimited money, when they can create currency out of thin air, that currency becomes worthless over time. It's mathematical. It's inevitable. It's guaranteed. And here's the kicker. The system is designed to enslave people. If someone is in debt, they're a slave to the system. They're under its control, working to pay back money that was created from nothing. But the moment someone takes their paper dollars and converts them into silver, they take control. The system can no longer manipulate their wealth. They're no longer at the mercy of central banks, of government policies, of inflation. This is why silver is a direct threat to the dollar. This is why they don't want regular people investing in it. Anything that goes against centralized control, anything that gives power back to individuals, it's dangerous to those in charge. Silver represents freedom. It represents taking control of your own wealth, your own future, just like cryptocurrency in some ways, decentralized outside the banking system. But silver has something cryptocurrency doesn't. It's physical. It's tangible. It's been real money for 5,000 years. It's not just digits on a screen that could disappear if the power goes out. And this is where the long-term thinking comes in. Silver isn't about watching prices every day. It's not about stressing over every dip and rally. It's about wealth preservation over time. Real silver stackers, the ones who truly understand, they don't check prices constantly. They don't panic when corrections happen. They certainly don't rush to sell when prices spike. They'll wish they could go back in time and buy silver at $75. They'll dream about having a time machine to return to this exact moment. Someone watching this years from now will look back and think, wow, silver was only $75 back then. The same way people today look back at $11 silver in 2020 and kick themselves. So why would anyone want the price to go up right now if they're not selling right now? Why do they need that validation, that confirmation? The smart play, the real strategy, is hoping the price stays low as long as possible so you can accumulate more, stack more, build more wealth before the inevitable explosion happens. Here's something that will blow your mind. Back in March 2020, silver was sitting at just $11 per ounce, $11. And at that time, there were people screaming from the rooftops, begging others to buy silver at that price. They were practically pleading with anyone who would listen. But you know what most people were doing? Absolutely nothing. They were sitting on the sidelines, watching, waiting, doubting. They had every excuse in the book. It's too risky. I'll wait. Maybe later. I'm not sure. But now, with silver at $75, everyone suddenly wants to buy. Now everyone is paying attention. Now everyone is interested. Now everyone sees the opportunity. Isn't that absolutely backwards? There's actually a famous meme that perfectly captures this insanity. It shows 3 checkout lines at a store. The first register has a sign that says $4.50, and there's only one person in line. The second register says $45, and there are about 10 people waiting. The third register says $450, and there's a massive crowd, people lined up as far as you can see, everyone rushing to pay the highest price. This is human psychology at its most irrational. As one expert once said, price is the greatest tool of misdirection. People would rather buy silver after it has already exploded, after the validation is there, after the hype is built, after their friends and family are talking about it. But when prices are low, and when it's actually the smart time to buy, everyone is worried, scared, hesitant. That's the complete opposite of how investing should work. The fundamental rule is simple: buy low, sell high. Not buy high and hope it goes higher. That's not investing, that's gambling. And there's a massive difference between the two. Gamblers throw money at the wall and just hope it sticks. The odds are heavily against them, but they don't care because they're chasing a feeling, chasing excitement. Investors, on the other hand, make strategic decisions based on information. They look at the data, they study the trends, they understand the fundamentals, they take information and use it to tilt the odds in their favor. They're not throwing darts blindly. They're making calculated moves based on knowledge. For example, a real investor looks at the economy and asks questions. What is the national debt doing right now? What is the dollar doing? What makes silver valuable long term? Is it scarce? Is demand increasing? What are the industrial uses? They gather information, they analyze, they strategize. That's why it's called a silver stacking strategy. It's not random, it's not emotional, it's calculated. And right now, as this Sunday night unfolds, silver is sitting at 75.25 process. For those who understand what's really happening, this is just the beginning. The correction that happened earlier, that drop that scared so many people. Real stackers didn't panic, they didn't sell, they probably bought more because they understood that corrections are normal. They're healthy, they're opportunities. And now as markets are responding, as silver is surging again, they're watching calmly, not with anxiety, but with confidence. Because they know the bigger picture. They know this isn't about day-to-day price movements. This is about long-term wealth preservation. This is about protecting yourself from the inevitable collapse of fiat currency. This is about being on the right side of history when the system finally breaks. And make no mistake, it will break. The question isn't if, the question is when. And when that moment comes, when the dollar finally loses its remaining value, when the inflation becomes undeniable, when the debt becomes unpayable, those who held silver, those who stacked consistently, those who understood the truth, they'll be the ones standing strong. They'll be the ones with real wealth intact. While others are scrambling, panicking, wondering what happened to their savings, silver stackers will be secure. They'll have wealth they can pass down to their children, to their grandchildren. Real money that has survived empires rising and falling. Real money that will still have value long after today's paper currencies are forgotten. So, as this Sunday night continues, as Monday morning approaches, as the world wakes up to see what silver has done, remember this moment. Remember that you had the opportunity to understand. You had the chance to see through the manipulation, through the noise, through the misdirection. Whether silver hits $80, $100, $150, or beyond, the real question isn't about the price. The real question is, do you understand what silver truly represents? Do you see it as just another investment, another number on a screen? Or do you see it for what it really is? Freedom, security, real wealth in a world of fake money. The choice has always been yours. The time to make it is now. Because tomorrow, when everyone else wakes up and sees these prices, when the crowd rushes in, when the validation everyone was waiting for finally arrives, it will already be too late to get in at today's levels. Silver is moving, the markets are speaking, and history is watching.